How to convert cost into profit. In business, there is never one-way traffic. In business, there is always a two-way traffic. Something will come in and something will go out, right? Either you are buying some goods and selling some other goods by using those goods, or you are buying those goods, adding some value to it, or your commission to it, and you are selling it, or you are manufacturing some goods through some raw materials, you are processing it and selling it. Input in case of services is that individual person's or that firm's capability to diagnose or understand or to solve that problem or the issue. And what is the output? Output is the delivery of that service. For example, for a CA, I'm giving one simple example of a CA. Many of you might be going for your audited balance sheet to a CA. So what is the input? You're going for an audit service. So what you are giving all your information, data, everything to it. And what is the output? The output is the signed audit report that you are getting, which you may be using for your bank loan, for your tender, for your personal books, whatever. So the input and output are always defined in a business. The minute the input and output is not defined, you are not in a business. So when we have a two-way movement in any business, we also attract a tax called GST. Income tax is optional to the people who are born and who are from scheduled tribe over here, and plus who are doing business over here. But GST is not optional. GST is attracted the moment you cross the turnover limit of 20 lakhs in case of goods and 10 lakhs in case of services in the state of Meghalaya. When we are having two-way traffic, then we will be having something which is known as purchases or input and something which is known as sales or output. So when we have purchases or input, we have something which is known as input tax paid on these purchases or input. Okay? And when we have sales or output, we have something which is known as output tax paid on our sales. So what are we supposed to do? We are supposed to subtract input tax from output tax and pay the balance. In case of cater, what will be the input tax? What will be the input tax?
Purchase of machinery.
Can I give one small example in between? See, I have heard many of my clients saying that, ma'am, if I don't take a bill, my charges are lesser. Right? This is the general mentality. Now, some of you who already have shops, whether it's grocery, food processing, where you are selling some finished goods, does the person charge you lesser than the MRP just because you are not taking a bill from the person? No. If you are buying something to make further sales, say you brought spices from this Kong, will she charge you lesser than what she's supposed to charge you? She may give you a 10% commission if you are reselling, say again, for example. But does she make it that I'll give you 10% commission plus 18% 5% more I'll reduce from my spice value? No. So what is happening? Actually, you are losing your input tax credit. by not taking the receipt. You are paying GST, but you are paying GST as an end consumer. End consumer does not get a credit. Why for personal use I am not getting credit? Because I am acting as an end consumer. If I buy a new Fortuner car, for example, to use it for my personal purpose, I will not get a credit. If I buy a van for lifting goods, I am in the business of hiring, giving on hire those vans, I get a credit. So I am not becoming an end user at that point of time. Here in this Fortuner car, I am becoming an end user. So by not taking bills of input for your business, trust me, you are half the way losing the money. Because your input tax is not coming. What happens? You are not giving your GST number to the person. But chhod do, you give me a kacha bill. I feel like saying what at that point of time? Because over here I know quite some designers who buy clothes to make their apparels and all. When they buy from big shops of PB like Hanuman Bucks or something, they say, Bhaiya, don't give me the bill. It's okay. By not giving the bill, he has not reduced the price. But you have lost your input credit. So you have paid tax 2 times. Once here, plus here. What you should have done? You should have done this minus this and paid the balance. But what you did? You paid this plus this. So, my humble suggestion is, whenever you are starting a business or whichever business you are currently doing, please take this into account. Yes, if your purchase value of something is 100, GST levied on it is 12 rupees, and if the person is selling you at 88 rupees, then yes, you have saved the GST. But if your commission is only 10% and he is selling you at 88%, trust me, you have paid the GST 2 times. Because this 88 rupees will have GST, or he has paid you at 80 rupees, which includes 8 rupees GST plus your 10 or 12 rupees of your commission. Then yes, you have saved. But he does not have the authority to not charge that GST. Because if he does so, then what he has purchased from the wholesaler, he will not be able to claim credit on that. So you have done a mistake by not taking the GST bill or not sharing your GST number to that person. Are you getting what I am saying? So whenever you are in a business and you are buying anything for the business, please take a bill and give your GST number to that person at that minute to be included in his or her bill. So in your business, first common mistake which I see is we generally pay output tax plus input tax. We should pay output tax minus input tax. So out of 88 rupees, if the GST is say 8 rupees more, so what is my profit margin? 4 rupees. I thought I am working at 12%, but actually I am working at 4%. Because GST is in MRP, GST is included. Please don't have doubt about that. Nobody charges GST over and above the MRP printed on anything. Many times when we are buying something in cash, we should not forget that if that thing is liable for GST, we are also entitled to get the credit for that. Cash purchases do not mean at any point of time that we cannot claim input tax credit. It never means. Because many times people have come and said me, ma'am, I have purchased in cash, so I will not get input tax credit. No, that is never written anywhere. It is not written. Now, Mr. A purchased goods worth 18,000, on which 18% GST was 3240. Okay? That is my 3240 is my input tax credit. Then he sold the goods worth at 22,000. He sold those goods which he purchased at 18,000 at 22,000, and his GST payable at 18% was 3960. So outward GST payable is 3960, less GST paid on purchases is 3240. So therefore, actually he has to pay only 720 rupees when he files his GSTR 3B. This 18,000 rupees thing, if he would have brought in cash, then also he would have got the same credit. The credit does not reduce if you buy in cash, and it does not increase if you buy by check or NEFT or any other digital payment means. This is a wrong misconception that I have come across every time in entrepreneurs. So the GST credit is what is stated in the bill, and always please take a bill. Please, if you are buying anything for business, please take a bill from the person from whom you are purchasing. Don't become the end consumer. You will be paying 2 times the same tax. How can I claim input tax credit? Firstly, I cannot go and say everyone, you raise a bill, today I am giving my friend's GST number. I will apply for registration after 2 months. Then you replace my number with his number. Please don't. That is not permissible. So in GST, there is no substitution of GST numbers. GST number should be yours if you are buying for your business. If you don't have a GST number, buy without a GST number. Then you are not charging also GST to anyone. But if you are buying for your business purpose and you have a GST number, please give your own GST number. Please don't do the mistake of giving GST number of someone else, because that someone else will get GST input credit. You will not get it. And there is no method of switching input credit from person A to person B. The bill that you are taking from the person should also have the GST value, that is the tax amount showing. 2.5%, 2.5% CGST, 2.5% SGST, or 5% IGST, whatever, it should be showing that. No bill is valid, or you cannot claim an input tax credit if the bill is showing 3,000 rupees inclusive of GST. This means what? With that, can you make out what is the rate of GST? If I give you a bill, 3,000 rupees inclusive of GST, I don't know what is the GST rate. How will I know? And if I give you a bill, 2400, IGST 600. So 3,000 is coming total. On this bill, you can take input tax credit. On this bill, you cannot take input tax credit. Even if you give your GST number, it's of no use. It's of no use, because 99.99% in most of the circumstances, this person will be a composition taxpayer. So composition taxpayer cannot give you GST credit otherwise also. The third important point is, to avail GST credit is that either goods or services must be received, or it is written in the bill that it is an advance bill for this so and so. So many times when we are giving big services, then we take 25% as advance. Or even if you are doing a contract business, you get a certain percentage as advance, 10%, 15%, 5%, 8%. So it can be in advance, but it should be clearly mentioned. And the person from whom you have purchased, supplier means the person from whom you have purchased, should have filed the returns and should have paid the tax. And if you want your GST input credit to be received by others, and you also want to receive the GST input credit which you have paid to others. Okay, we can claim GST credit only if we are not charging depreciation on them. As an individual, are you really required to charge depreciation on these machineries? We are not a big business house, corporate house that we have shareholders. So if we charge depreciation on these things, we lose our GST credit. So it's better we avail the GST credit than to charge depreciation on these machineries. Because your aim is not to sell the machinery after 1 year at a reduced price. Clear? So it's better to claim input tax credit on such machineries than to charge depreciation on them. Okay, and there is a prescribed time limit to avail the credit. The first time limit is at the time of filing the GSTR 3B of that month. The second time limit is 30th September of the succeeding year. That is, for year ended March 23, that is 1st April 2022 to 31st March 2023, if I have missed on any input tax credit, or if the supplier has filed the returns late and I could not take it in any of those 12 months, I can take those credits up to 30th September 2023. That is 6 months I still have to reconcile my input tax paid and input tax received in GSTR 2A. Okay, that reconciliation part is very, very critical. At times I have seen that reconciliation part really helps you to improve your profits. Now the most thing which, or where this Kong went, was so scared of penalties and late fees. Okay, when you don't file your returns on time, what happens? You are charged with two types of fees. One is penalty or late fees for non-filing of return. The second thing is interest, because if you have filed your GSTR 1 late, then the interest starts ticking. So that interest on late filing for the value in GSTR 1 is also calculated, plus the number of days that you have delayed in filing GSTR 3B, that is also calculated. So penalty is something that we should always keep a distance with. We should not invite it. That's why the common example or the simplest method I told you, that if somebody is not uploading their GSTR 1 and that person is a habitual defaulter, then you hold back only the GST amount. Your loss is what? In 2A. GST amount, the value of goods has no importance. You are not getting credit of the value of goods, you are getting credit of input tax. So you hold back the input tax amount and you pay the input tax when the GSTR 2A, you can see that bill and everything. But that generally happens out of 10, maximum 2 suppliers who file it very delayed. 8 of them file it because they also are fearing of interest which they have to pay while filing GSTR 3B. Now, linkage between GST and income tax I have discussed before lunch also. Now to just take it more forward, if we have filed something under (1026) in the IT return, it does not necessarily means it is not taxable under GST. It may be fully taxable under GST. Okay, this we may be exempted, this we may not be, because maximum cases that my office is doing now, under 1026 people have filed 10 crores also as exempted income, 3 crores, 5 crores, 6 crores, whatever. Under GST, the income is 20 lakhs, 30 lakhs, 40 lakhs. How to match these two? You cannot have a 9 crore rupees rent every year. I have not seen people getting 9 crores in a year as rental income by giving rent to households. It is almost like you have to have half of Shillong with you. It is not possible to generate that huge rent. So what has happened? People are saying that this is their non-taxable income under GST. But under GST, even with it's non-taxable, you have to disclose that income as exempt income or taxable at 0% rate. But if that is not disclosed and under income tax you are showing much higher income, then notices come from income tax stating that source of income is not known, please explain. And under GST, if you have given explanation, say they may make it 0%, but GST will say please explain the source of income, whether it falls under GST or not. If you want to say it's a rental income of households, you have to prove that house belongs to you and you receive that money, which is next to impossible to prove. And if you say I have done construction business, construction is leviable at 18%. This way also gone, that way also gone. So please ensure, if you file your income tax returns through someone and also your GST returns, please ensure a parity between the two. Because now so many notices we are also handling because of this disparity, it is becoming nightmarish. Because we cannot guarantee anyone that we will win the case for you. And this is one major cause of concern. This Wednesday we have been invited for a meeting on these issues by the Northeast Commissionerate of Income Tax, because we have raised this severe grievance that people were not aware so much. But not being aware even after 5 years of tax is not an excuse, actually we also know it. So let's see what is the outcome of that meeting also, so as to exempt people not to issue income tax notices. Because the moment income tax notice is issued, the beauty of the thing is the software is now merged. Because whatever GST returns you are filing, the moment I click your PAN, I will be knowing what GST return you have filed, how much money you have deposited in your bank, how much money you have withdrawn from your bank, whether you have purchased a car in the year, whether you have purchased any property in the year, whether you have purchased any jewelry worth more than 50,000 in a year. I'll know everything. So if by mistakenly I know your PAN, I know what you have done with your money the whole year. And if you have kept only cash with you, then fine. But how long will you run with cash? You cannot keep 4 crores and sleep and walk every day with it, with 2 luggage suitcases going to market also with it. No? You have to deposit in the bank someday or the other. So what do you do? Because today if you buy property also, you have to get it registered. And you have to pay a small duty, right? Especially if you buy anything outside the state. Here though you can manage with your people. What do you do if you buy a flat in Guwahati? You have to get it registered at a stamp duty value. And the moment you get it registered, it starts reflecting in your income tax AIS. So please match. My suggestion is, please try to match your GST return and income tax return, because that we are facing day in and day out. Even if some of you must have received notices, you may not be aware, because no more notices come through letters. They all come in the email registered. So the notices may be lying in your email in spam, or they may be lying in your email unattended because you are not used to opening your email accounts on and off. So please go and check that. And once registered under GST, please match these two. See, under income tax you are not taxable otherwise also. If you declare the correct thing both sides, you are always saved. You are always saved, because this becomes a certificate for you. What is your turnover? You can download that certificate. Equally, your income tax submitted return is another accepted certificate by government, because if everything is matching, you receive your tax clearance sort of certificate from government within 15 days of filing of return. So you have 2 tax clearance certificate in your hand. But here if you have one figure, here you have another figure, it doesn't work. Many times refunds given have also been called back. So please be careful on this part. And secondly, GST, you have to be very disciplined entrepreneur. It is no more like VAT, that you can get an entry done whenever, whichever date you want, because you know the inspector. It is not possible. And no notices come through letter. All notices come on email. So with GST, be very, very vigilant and careful. Either don't take the registration, or if you take the registration and if you are not understanding how to go ahead with it, take help of someone who will at least guide you for 3 to 6 months, so that you can take it on your own after that. Be very, very disciplined with GST.